Hi, I am Anna. I come from www.ntvforex.com. USD JPY slipped from the 106 area to 105.41 analysis http ntvforex.com news ID 33070D8/19/2026 34:11 am. Few economic data and lack of other news brought another sentiment-driven trading session yesterday. The gradually improving risk mood after a shaky Asian session didn't make it until the end of the European session. EMU stocks gave up intraday gains of 0.5% while German yields turned a 1 BP rise at the long end of the curve 10Y, 30Y to similar losses. Peripheral spreads were unchanged. Stocks in the US displayed a different picture. Tech lead the way higher again after brushing off early weakness. The S&P 500 surpassed the February top to close at a record high. U.S. Democrats willing to compromise in fiscal stimulus talks likely supported the intraday turnaround. U.S. yields traded choppy but closed lower eventually. The curve bear flattened as yields dropped a 1.9 bps 10-a year to a 3.8 bps 30-a year. The U.S. 10Y real yield declined to a 1.04% yesterday, further undoing last week's supply-driven rise. These real yields were an important driver behind the dollar weakness over the past few weeks and again yesterday. The greenback even slipped below key technical support areas after the WHS Economic Advisory Council dimmed expectations for another large stimulus shot, accelerating the downward move. The trade-awaited $DXY fell from 92.82 below the previous August low to 92.27. Euro USD jumped beyond resistance at January 1916 to hit an intraday high of January 1966. The pair closed at January 1931 eventually. Largest losses were to the Japanese yen. USD JPY slipped from the 106 area to 105.41. A weaker dollar to sterling filtered through in Euro GBP2, falling from 0.906 to 0.901. Asian markets failed to build on yesterday's SWS performance. Indices trade mixed in a session devoid of news. South Korea outperforms after a poor Tuesday. China lags amid a request from the U.S. State Department to colleges and universities to divest from Chinese companies. HK markets are currently closed due to a typhoon. Core bonds trade sideways. The dollar steadies after yesterday's blow. DXY 92.35 paired opening losses as did USD 105 Japanese yen and 57 sen. A mirror move in Euro USD keeps the pair more or less unchanged at January 1934. Today's highlight on the Echo calendar are the Fed meeting minutes. The previous policy meeting wasn't quite a game changer. However, it might be interesting to see the discussion evolving on additional forward guidance which some expect could come as soon as September. The US selling 20Y bonds also draws attention, but unlike last week, supply this week hasn't really supported yields whatsoever. On the contrary, barring an exceptionally poor auction, we'd be wary to row against the current tides, meaning core bonds downside is well protected. The dollar's decline could slow from here on, but yesterday's move undeniably deteriorated the technical picture dramatically. We don't expect the big recovery to happen soon. Sterling slightly gains on this morning's surprisingly strong inflation figures. Headline 0.4% versus a 0.1% expected, core 1.8% YY versus 1.2%. Assuming knock-on effects from a plummeting dollar eases, we expect Euro GBP to hold steady as Brexit talks develop. Euro 90 pence's next support. NBSP News headlines: U.S. Undersecretary for Economic Growth Crack advised Board of Directors of U.S. universities and colleges that it would be prudent to divest Chinese firms' stocks in their endowments in the likely outcome that enhanced listing standards lead to a wholesale DEA listing of Chinese firms from U.S. exchanges by the end of next year. This guidance fits in the broader U.S. strategy to slow the flow of investments into Chinese companies. Earlier this year, the government targeted pension funds. U.S. Postmaster General DeJoy said he is suspending scheduled operational changes until after the November presidential ballot in order to avoid even the appearance of any impact on election mail. U.S. Democrats earlier accused DeJoy of working with U.S. President Trump to sabotage the mail-in voting progress, which is expected to surge because of the COVID-19 pandemic. Download the full Sunrise Market commentary. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.